things like investment, growing a team, building your product and having a chance to showcase it, marketing, comms, legals, and that kind of stuff. We have a few partnerships with companies that we think would be really beneficial for startups to have access to. And Deloitte was one of those companies because their Propel product is actually designed with startups in mind. So we've been working with Deloitte Propel for a year now, just helping them to access the Deloitte services, get some advice and support and feedback, and have the kind of access that they need when they've got questions about money and finance and that kind of thing. So I'm going to introduce Graham now, who's going to go through the presentation. There'll be plenty of time to ask questions later, and the way that you'll submit a question is on the chat feature via YouTube. So just add any questions you've got as Graham goes through the presentation, and then we're going to bring Lolu from the Deloitte Propel team to ask those questions later. So do keep in mind any questions that you have and ask them, and then we'll have an opportunity to go through them. Otherwise, I will leave Graham to take it away.
Thank you very much. Good afternoon, everybody, and welcome to the webinar. The plan today is basically I'm going to talk to you all about business resilience, what this means to me, and the steps that I would take to ensure my business is resilient. There's some topics there that I've got on the agenda, and I've got a number of slides that I'll go through. But as Purdy mentioned, please feel free to raise questions, and I'll try to ensure I answer as many as possible, either at the end of the presentation or subsequently if that's necessary. So let me introduce myself. My name is Graham Rennick, and I've been a director with Deloitte for 2 years now, and joined in the Propel team, and I lead the Propel team. I've returned to the profession. I actually trained with PW about 25 years ago. And I've spent the last 25 years in industry with a number of commercial and finance director roles in companies as diverse as healthcare and food manufacturing. I've also worked in FTSE 25 companies, but also small family-owned businesses as well. And I guess during that time, my experience has covered both the statutory financial responsibilities, as you would expect of a finance director, but I've always had a key responsibility for building business resilience and ensuring funding was in place to meet the needs of the business. In some cases, that was to ensure we had the funds for major acquisitions, but in some of the smaller businesses, it was actually just to ensure that the business could survive. In fact, one of my first roles when I was actually a graduate was actually monitoring the company bank account. So we were very short on cash, and the role each day was seeing how much cash had actually been paid by our customers. And from that, I could then work down the list of overdue suppliers and work out which ones were the most important and which we had to pay first. So, you know, really in there at the deep end in terms of managing the cash flow of the business. So what is Propel and Deloitte Propel? So Propel is a division of the Deloitte business. The Deloitte business is the #1 accounting firm in the UK, and we are a part of that. We were set up 4 years ago, and the aim was that we would support the SME market and work with the 90% of businesses in the UK that the large Deloitte business wouldn't normally work with. And what we provide is a technology-enabled end-to-end accounting service through cloud-based software. And behind that, we've got a team of accountants and bookkeepers, all with Deloitte expertise, who support the clients and the accounting software. So we provide a full range of services, which include bookkeeping, management accounts, VAT, payroll, year-end accounts, and corporation tax returns, as well as obviously being able to utilize the wider Deloitte resource with things like R&D claims, EIS setup, and any other tax advisory work. We have close to 800 clients now, and during the recent COVID crisis, or the ongoing COVID crisis, we've supported a number of those with support and advice. Some of the main things that we've supported them with has been around the furlough scheme, but also with loan applications, preparing cash flows, and that type of thing. And so, you know, it is quite clear that we're in very unusual and difficult times with COVID-19. And I've seen quite a lot of surveys about this, and the general consensus, I think, from smaller businesses is that government have done quite a lot to try and support businesses. But that said, it remains incredibly challenging, and businesses will need to be as robust as possible to be able to survive. Hence why we're talking about business resilience today. So what is business resilience and how would I define it? In very simple terms, I see it as the ability of a business to continue to operate in times of uncertainty or when facing major challenges. So let me just sort of repeat that, because I think it's important. In times of uncertainty or when facing major challenges. And I'm sure you've all heard the term business continuity planning. And that comes across, I think, as a sort of very grand term. But in reality, all that means is that the management have thought about the major risks that could impact the business and to develop a plan to address these scenarios should a crisis occur. So let me give you an example. I work for a food manufacturing company, and one of the risks that was identified was that the ovens would actually catch fire and burn down the factory. And that is exactly what happened. But because there was a plan in place, alternative manufacturing was already identified and was activated the following day. As a consequence, only 2 weeks of production were lost, and a new site was developed within 9 months. Unless a plan had already been in place for this, that would never have happened. We would have been out of stock for a long period of time with the consequence of loss of business. But because we planned for that scenario, we were able to react much more quickly. And so, you sort of think as a smaller business, well, that's not relevant to me. And clearly larger businesses are much more focused on maintaining long-term profitability. But for smaller businesses, the concern is much more simple. And it is around, how do I ensure that my business will survive? And the main focus there in terms of the business surviving is, how do I actually pay my debts as they fall due? And that's your suppliers, employees, and of course the HMRC. And you're probably all aware of a number of examples recently with football clubs like Bolton and Bury going into administration and having all sorts of financial issues. And the main reason is that they tend to operate on a day-to-day business. They try to meet their immediate commitments, and so that is paying their salaries and their immediate suppliers. And when they start to run into trouble, then the headlines become that they're not paying their staff, they're not paying their players. The major issue, and the thing which always ends up with the clubs being forced into administration, is normally the inability to pay the HMRC. So they broadly manage on a daily basis, but they don't have a plan in place, and they haven't got a robust business plan to ensure that they can meet any year-end tax due. So a number of these businesses are simply not resilient because they're not adequately managing their cash flow and cannot adapt to any change in circumstances. And I'm sure as a consequence of COVID-19 and everything that's happening at the moment, there's going to be a number of other football clubs who are faced with these sort of financial issues going forward. Of course, business resilience is not just about how to survive a crisis. It's also about being proactive as well and ensuring that you're agile enough to take advantage of opportunities. And I think during this crisis, there are numerous examples of how people have adapted their business model and taken advantage of the opportunities that are available. A very simple example, my village pub is obviously closed down at the beginning of the lockdown. So they converted to a takeaway food business. So they kept the restaurant open and they were available for takeaway restaurant food, and actually did delivery restaurant food as well. So they didn't just shut up shop, furlough everybody, and close the doors. They tried to take advantage of the opportunities that were available. So exploring a little bit more about what is business resilience, and there's a quote that I like, which talks about business resilience and how people manage their business. And that is, turnover is vanity, profit is sanity, but cash is king. I'm not quite sure where the full quote came from, but certainly cash is king was attributed to the CEO of Volvo following the 1987 stock market crash. And I think I've during the course of my career, I've been exposed to a number of strategies, and I'll give you my view on the quote and why cash is king is certainly fundamental to business resilience. So let me start with turnover. In all companies, and this is without exception that I've worked in, there's always been a sales-related bonus. And this is encouraging both the sales team and management to drive the sales line at all costs. And the main thought being there that if you grow the sales line, then everything else will follow. Well, in my experience, that's not always the case. There are a number of issues that I've encountered which relate to driving sales at any cost. Normally around promotions. So you reduce the price and high volumes increase the sales line. However, this can result in sales below cost, and in most cases, simply educating the consumer to buy on promotion. Volume spikes when you're giving the product away, and don't sell anything when it's returned to full price. In a competitive market, this can also lead to a fight for market share, but this again often just results in a race to the bottom and driving the price down. The consumer is no longer loyal to brand, but simply switches depending upon which product is on promotion. Clearly, both of the above have a significant impact on profitability and will test business resilience. There needs to be a sensible plan in place for growing your sales in order to ensure business resilience. And whilst growing your top line, growing your sales line may look good, it's not always sustainable and can lead to future financial problems. So great. So profit is sanity. If we focus on profitability and sales are growing the profitability of the business, then that is fine. And a term that I often use is around profitable growth. So make sure that all sales growth is profitable and increasing the profitability of the business. And it's something I've always and still tried to implement. Focus on an appropriate selling price and maintain a tight control of costs. However, and I'm going to explore this in a little bit more detail, even very profitable businesses can go into administration. Just because a business is profitable, if you run out of cash and you can't pay your bills, then you're going to run into financial difficulty. So cash in the bank and that ability to cover liabilities and also take advantage of opportunities, for me, is the cornerstone of a resilient business, and hence why I think cash is king. So let me just talk a little bit about working capital and how we manage our cash. So on here, we're saying working capital denotes the amount of funds needed to meet the day-to-day operations of a business. And I just want to turn that round a little bit. And when we focus on working capital, because whilst we're saying cash is key to ensure that we meet the day-to-day funding of the operations, in reality, how we manage the day-to-day operations of the business and how we manage our working capital has a major impact on what cash we actually need. And as we say on the slide there, the actual management of day-to-day operations can be the difference between having cash in the bank or actually needing an overdraft or a loan. So I'll take you through an example, but first let me just define what's included in working capital. And generally included in working capital will be stock. So this can either be purchased product or produced, and it's stock that's needed to meet future sales. We have our debtors, and how we manage our debtors is key, because if we don't get paid for the sales that we make, then essentially they are completely worthless. And then we have our creditors. And this is the money that we owe, whether this is for stock, for raw materials, or any other services that we buy. So let me take you through a very simple example. And this is just a simple example, but actually relates to two companies that I've worked for and the way that they approached and their approach to working capital. So very simply, we've assumed sales through January, February and March of £1 million a month, a cost of sales, so the stock and the cost of the sales, 0.5 million a month, and a gross profit of 0.5 million each month. So company A takes a very cautious approach and has 3 months worth of contingency stock. The thought there being that they want 100% service levels and they want to be able to meet all customer requirements. So actually they've got 1.5 million of cash tied up in stock. With debtors, they've got 60-day payment terms with their customers. So all of their customers pay them 2 months after they have received the stock. So in there is £2 million worth of cash tied up in debtors. So the debtors being the money that is owed to us from our customers. So we've got £2 million sitting in there. And actually, company A is very good with its suppliers. The number of small suppliers there, and they believe that they need paying very quickly. So they pay them within 15 days. So actually, there's only there's £250,000 which we actually owe to suppliers at any point in time. So if you look at company A, the cash required to actually fund company A's business is 3.25 million, which is a huge amount of cash to hold, to be tied up in working capital. And actually, company A actually had a bank loan to be able to fund this. So it was costing company A close to £500,000 a year in interest simply to fund the working capital requirement. If we look at company B, they've adopted a completely different approach. So they're not really concerned in 100% customer service levels. They thought that 97% is fine. So they worked just in time and held only 2 weeks stock. So whereas company A had 1.5 million tied up, company B only had £250,000 tied up in stock. They implemented 15-day payment terms with their customers. So all of their customers paid them within 2 weeks. So there, only £500,000 was tied up in money owed from their customers. And finally, they adopted a much more aggressive approach also with their suppliers. And they had their suppliers on 3-month payment terms, so 90-day payment terms. So they actually had a cash benefit of 1.5 million from money that they owed to their suppliers. And as you can see, unlike company A, who needed a loan to fund their working capital, actually company B had cash in the bank because of the way that they were managing their working capital. And that 0.75 million could be used to invest in other opportunities and generate additional income. So as you can see, a very different approach and a very different impact on the cash that was required. So company A, very cautious approach. Company B, a lot more aggressive. And these are actually real life companies that I worked for. And I actually joined company A, having previously worked for company B. So as you might imagine, having worked for a company where we were generating cash from our working capital, to actually have a bank loan and be negotiating with the bank about loan requirements, overdraft facilities, and the costs of doing all that, was very difficult for me. Now, company A's argument was around building good business relationships with both customers and suppliers, as well as having enough stock that they could achieve 100% service levels. So we challenged that approach, and within 12 months, through sensible discussions and negotiations with suppliers, customers, We'd actually reduced the stock holding to a month. We've been paid by our customers in 45 days, and we're paying the creditors between 60 and 90 days, depending upon their size. So actually, through a lot of those negotiations, we actually developed better working relationships and ultimately significantly reduced the overdraft and the interest that was being paid. So as you can see, even though it seems, you might think you're operating in the best way for yourselves and your customers and your suppliers, in reality, you can make a huge difference to the resilience and profitability of your own business just through some simple negotiations and discussions. The final point I'd like to make on this is achieving working capital gains is part of a negotiation. So ensure that the result is going to be cost effective for you. So as an example, and when I look at customer B, it is very easy to reduce your debtors if you introduce an early settlement discount, or potentially even use very expensive invoice factoring. So please ensure that an appropriate balance is maintained. Company B, in this example, got paid in 14 days by customers as it did implement an early settlement discount. But that was actually the best approach for this business, as they fully utilised the cash that was made available and took advantage of the opportunities that were available. But that needs to be taken on a case-by-case basis. So how do you actually react to a short-term crisis? You may have all of the fundamentals in place, strong control of working capital, tight control over your cash, but there are always going to be events that create uncertainty and require changes to our plans. I think COVID-19 is such an event. Overnight, the business landscape changed and nobody really was expecting it. And no amount of business planning, in my view, could have prepared us for this scenario. At Deloitte, we have a very robust business continuity plan, and we had plans in place. But what we'd never done was test our capability of thousands of employees in the UK, all suddenly working from home. I think we actually saw that the crisis looming, and we did have a test day planned. And everybody was told that they were going to work from home. And that turned out to be the day that the lockdown was announced. So it wasn't a test anymore. It was suddenly a reality. We suddenly had thousands of people in the UK all sitting at home. And that was the first test that we had of our IT capability and whether we could manage this. If that had failed, then we would have had a major issue. But thankfully, that was not the case. And we've adapted well now to our new ways of working. I think the main issue could have been around IT, but that has been incredibly robust for us. And I'd suggest, we're quite fortunate that that was the case, because things could have been very different. But we've adapted well to the new ways of working, and we're looking ahead now and looking at how this will evolve going forward and what we do need to do to change. And so in terms of maintaining business resilience in the middle of a crisis, I think there are three key points that I would make. The first is to be adaptable and take advantage of all the opportunities that are available. Tailor your offering. I was in conversation recently with a business whose primary focus was being HR consultants. And during the course of the crisis, this has evolved, and they've actually retrained a huge number of those consultants to become health and safety consultants. And these health and safety consultants are now in huge demand because all companies are now struggling with the complexity of how they get the teams back into the workplace. Huge number of issues around social distancing, how many employees can be in the workplace, what workstations need to look like, and so on. So there's a huge opportunity and advice needed in this area. And the other area they're supporting on as well is a number of businesses are not necessarily going to go back into offices in exactly the same way. So how do we, or how do they support employees who will be working from home longer term? So some of the health and safety issues that we take for granted in the office because processes are in place will continue to be issues as people work from home. And so we need to work out how we're going to address those issues. The second point I would make is be proactive. So all of us, and you need to drive the agenda and decide what you are going to do. And I think the focus really needs to be on what you can do, not what you can't do. And the final point that I would make is don't rely on the government or anybody else to provide the answers. Obviously, the government have put a huge amount of support in place, and utilize that and utilize whatever support is available. But you drive the agenda as much as possible and take control of your business. So in the short term, what actions can I take to manage my cash flow? And I think the key point that I would make is that you minimize the amount of cash spent wherever possible. So if you don't need to spend it, don't spend it. And so there are a number of areas on the chart that you can see in front of you, and some very basic ideas, but these are all very effective in managing short-term cash flow. So repair, don't replace. So if a machine or a car or any sort of equipment that you might normally replace, think about repairing it. It may be more cost-effective to replace in the long term, but actually in the short term, conserve whatever cash you can. And a small repair bill may be easier to manage than the full cost of a replacement. Lease, not buy. And again, it's the same principle as what I've just mentioned about repairing. Spread the cost over a longer time frame, and that's going to help your short-term cash flow. And I'd make the point, these are not always the best options longer term, but certainly, these are definitely considerations and worthy of consideration during a crisis. Look at your utility and production costs. How can I adjust my production, the working patterns to reduce cost? So, if factories are not at full capacity, then produce at a time when the utility bills are lowest. Certainly don't be paying staff overtime. And just minimize the costs as much as possible. And if you do have spare capacity, just how can you improve efficiency? With regard to staff costs, and these are often the main costs of the business and the most difficult to address in a lot of cases. I guess the first point is, how relevant is the furlough scheme to you? And how do I best utilize? So it has evolved since it was initially announced by the government. We're going to move to a stage shortly where part-time working is allowed. So how do you best utilize the furlough scheme and make it work for you? And what I'd say there is, the scheme has evolved. So if you don't understand the scheme or you need help on how best to utilize or structure it for your business, then ask for support. And the main thing, and this is not just in a crisis, but this is ongoing, you need to ensure that you've got the right people and structure in place, both to reduce costs in the short term and ensure you're structured for success going forward. So making sure you've got the right number of people, but also with the right skill set. If the business is evolving, how do you make sure that you either retrain employees or ensure you have employees with the appropriate skill set? We've spoken previously about working capital and the impact that working capital can have on cash. And so one of the ways in which you manage working capital and reduce your cash outflow is working with your suppliers and working out which suppliers you can defer payment to. So are there any suppliers that I can work with to increase payment terms? I'd suggest that in current times, and we've seen numbers of examples of this with a number of our clients, a large number of suppliers would prefer to retain you as a long-term customer than than force you out of business by demanding payment. So please talk to suppliers where appropriate and defer payment where that can be agreed. The HMRC should be one of your first points of contact, as they are, supported by the government, actively encouraging businesses to defer payment where impacted by COVID-19. So VAT payments can be cancelled and deferred until March 21. With corporation tax, pay-as-you-earn, and national insurance, all of these can be negotiated with HMRC and time to pay agreed. But I'd stress here, don't just not make the payments. This needs to be discussed with HMRC and agreed in advance. And initially, they'll agree a deferral of an additional 3 months, but that's likely to be extended. And the final point I'd make is just what options do you have with deferring staff payments or reducing short-term costs? And so again, a number of employees would rather retain long-term employment certainty. So, can you defer some payments to your staff, particularly around things like bonuses? There are a number of examples in some of the high-profile football clubs have agreed salary cuts with their employees during the crisis. So these are all things that can be considered, and certainly things I think which employees would consider, given that might give them the certainty of guaranteed future employment. And I think negotiations with other suppliers and reducing stock levels, that should already be part of ongoing business resilience, as we've previously discussed. But now, in current times, look at it again and push that and focus on that as much as possible. I think this is a very simple slide, and let's look at which costs are discretionary, and clearly in the short term, cut back on any costs which are not essential. And so things like sales and marketing, quite clearly, are designed to build your business for the future, but in the short term, maintain your cash and cut out any costs which are not essential. You need to still be in existence in the medium to short term to benefit from sales and marketing costs. So make sure you've got the cash to be able to survive any crisis. So I've talked about the crisis and how you can cope with it. And the last 3 months have been incredibly difficult for all businesses. I think some have done well out of it, but that's through being in the right place and a lot of hard work and adapting to the opportunities, but they have been very difficult. And we've all had to react to instructions from the government. So, ourselves in Propel and Deloitte, we're told we had to go into lockdown. So immediately we had to start working from home, and we had to react to that. The government did provide initiatives to support businesses and individuals through what has been an incredibly difficult period. And it is without doubt that the last 3 months have been incredibly difficult for everybody. However, it's not unrealistic to think that the next 3 to 6 months are going to be even more challenging for businesses as we all continue to adapt to the new norm. And I think those businesses which are the most proactive and adaptable will succeed with the new opportunities that arise. I think it's clear to most people that the new normal is going to be very different to anything that we've experienced previously. So some things to consider as we move out of lockdown. I think there's 4 points that I would stress, which are kind of overarching, the more detailed points that I'm about to make. But the 4 points that I'd stress are the following. You need to be adaptable. So adapt to the opportunities that are available. Be proactive. So, look at what opportunities are available for you, and be proactive about going after those. Communicate with your employees. So make sure that all of your employees, particularly those that are on furlough, that you maintain and ensure there's appropriate communications, and have a clear view on your cash requirements. So make sure you've got cash flows in place which take you through the next 3 to 6 to 9 months, and make sure you're fully on top of those and you have the cash available to get you through the remainder of this crisis. And so on a more practical level, what are the things that we need to think about as we return from lockdown? So the first one there is returning to work. And what does this actually look like? Does this need to be the same as what we did previously? And what learnings have you got from the lockdown period? So, quite clearly for us at Propel, we are a cloud-based accounting solution. We've adapted really well to working from home. There has been a lot of advantages of us working from home. So how do we ensure that the good bits of what we've had over the last 3 months are retained and they complement how we used to work previously? So what can you do differently? And how can I adapt to opportunities? And where you are returning to work, absolutely ensure that the workplace is safe for employees to return. So that's the whole social distancing requirements and everything else which is associated with a safe return to work for your employees. Consider the impact on all of this on your employees. So what are the people implications? And the things for you to consider are, have I got the right structure? Do I need to retrain people? So we've spoken previously about how companies have retrained their consultants to adapt to current opportunities. Is there anything you need to do to retrain your people to take advantages of the opportunities going forward? How long and how do I need to utilize the furlough scheme? So you know that it's going to become increasingly more complicated as we move forward and we move into part-time working. So make sure that you're taking advantage of the scheme and you've got the appropriate structures in place. And I'd suggest you take advice as appropriate on this. And the main point that I've got there is communicate with employees. So get them involved in discussions and ensure that they buy into any future plans that you have. It's much better to have them on board from the word go. So if you think about the situation the government had in sort of May time, so the government announced that teachers and schools were going to go back. Schools were reopening from the 1st of June. But the unions immediately came back and refused as they hadn't been consulted. If they'd been part of the process, then there could have been a much more straightforward return to work for the teachers and the schools. What I would say is employees want to feel involved in the decision-making process. So the more they're involved and you include them in that process, the more they're going to buy into the plans and your plans for them going forward. So over-communicate, and particularly with those people who you may not have spoken to as much because they've been on furlough. So what other opportunities are going to be available? So some key considerations for your business. I'd say, look at what works really well now and that I want to keep on doing. And so if there are things which are particularly successful, how do I ensure that key contracts are in place with customers and suppliers going forward? As well as customer contracts, obviously having a robust supply chain is also key to surviving and coming out of this crisis in a good place. And also, just what do I need to change and adapt to capture the new opportunities? So there will be different and new opportunities out there. What do I need to do differently to be able to adapt and capture those opportunities? And finally, review and analyze your business performance in depth. So how has the business performed during the lockdown? What's worked well? Where are there issues? How am I best placed going forward? So what are the things that have surprised me about things that are going well, and how do I build on those? what issues have occurred that I wasn't really expecting, and things that I could do differently. Go through your business performance, particularly over the last few months, and understand what has worked for you, and make sure you've got plans in place to capitalize on that going forward. I've mentioned this previously, but continually update your cash flow and ensure you've got sufficient funds to continue in the short term. Where possible, as part of the cash flow, try to assume limited government support, because the government support is uncertain and is changing as you go forward. So try to survive without that, and then anything which comes from the government is an added bonus, really. And if you see that additional funding is going to be required, then please speak to your bank early. You're better to approach your bank with a solid cash flow forecast and a viable business plan. If you've got that in place, then you're much more likely to have positive discussions with your bank. If you turn up to your bank at the point where you've completely run out of cash and you've got a whole load of suppliers demanding payment, then the conversation is likely to be much more difficult than approaching them on a proactive basis. So just as a reminder, and to summarize that, coming out of lockdown and moving forward, 4 key points: be adaptable, be proactive, communicate and continue to communicate with your employees, and have a very, very clear view of your cash requirements. Final slide I've got here is just a summary slide of all the government support which is available. I'm sure where appropriate that you are aware of a number of these schemes. This is for information. I don't intend to go through this slide in any detail, but clearly there's a government website there which will support with any of the initiatives above, or speak to your accountants or HR advisors, who will, I'm sure, be happy to support you with any of the products on here. So that is it for me in terms of the formal presentation. Thank you all for listening. If you have any questions, please put them through the chat feature, and I will be happy to take them. Thank you.
Okay, Graham, we're just going to go straight into some of the questions we've already got so far. The first one we had is asking, is the Propel offer only available in the UK?
The Propel offer is available for companies operating in the UK. We have a number of clients who have an overseas parent company, but have a UK subsidiary. So we support the UK subsidiary of those companies.
Okay. The next question was, how do you know when to prioritize growth over profitability and cash?
My answer to that would be that I would always prioritize profitable growth. So I would look to grow my top line, but also I would want to grow my profit as a consequence of growing my top line. I have not experienced personally any examples of growing your top line at all costs, of that being beneficial. So my advice would be profitable growth. In terms of prioritizing over cash, I think once you have got a robust cash flow forecast in place, and you know that you are comfortable with your funding requirements going forward, then you can look at how you invest in your business. But again, I would still stress that for me, profitable growth is the key to moving your business forward.
Okay. And the next one we've got is, can you renegotiate payment terms after they've been agreed with a supplier, especially at this time?
Yes. So you can always negotiate, and I think now in particular is a great time to be having those discussions. There's a number of clients that we have who have been through this exact process. So we've got a client who had some legal work done, and essentially their solicitors were threatening to put the company into administration if they didn't pay their bill. We had a sensible conversation, even with the lawyer, to say, well, you're better off having some money now and some money further down the line as the business survives. And I think that is a very valid argument, and one which suppliers in particular are listening to at the moment. They would rather have customers who are going to survive into the longer term and have you as a customer going into the longer term than lose you as a customer simply because they're forcing unrealistic payment terms on you at this particular time.
Okay, and a follow-up question from that is, do these kind of renegotiations with suppliers or employees need contracts or paperwork?
I guess the simple answer to that is it depends what contracts you already have in place. If you have got a contract with a supplier and you want to change the payment terms in there, then clearly you can have an addendum to the contract which says that in the short term, for whatever period is agreed, payment terms will be increased. As long as the supplier is happy, then an informal agreement, I think, would probably work in those circumstances. With employees, then yes, it would be a change to their, in some instances, it would be a change to their terms and conditions. If that takes place, then appropriate paperwork should be in place. But that just may cover, it may cover a short-term period. So I know some clients who have adopted a reduced working hours scheme for a period of 4 months. And there's just been an amendment to the contract which basically says for the next 4 months, you'll work 60% of time and your terms and conditions will reflect that. In 4 months' time, you will return to your old contract.
Okay. And then the next question is asking, can you explain the different stages of going into administration?
No, I can't actually. I can't. But leave that with me, and we can get back to you with an answer to that. It's not something that I've ever done or that I'm an expert in actually. So I'd rather not answer that, but I will find an answer to you.
And Masha D, if you can email us directly, and we'll try and get that answer over to you. And the next question is, how much cash do you realistically need? Enough to survive for 3 months or a year or something different?
Okay. So it largely depends upon the stability of your business at any point in time. I would suggest during the current crisis, you would probably expect to need cash for 6 months. But it largely depends upon the unpredictability and the impact that any crisis is having on your business. So if business is stable and you've got a customer contracts where you're getting a guaranteed income every month, then you probably don't need to have a closer focus on your cash flow. In the current environment, if sales are particularly challenged and you're not quite sure what sales you're getting in, then I would certainly try to have enough cash to survive for 6 months until you get through this crisis.
Okay. I think those are all the questions that we've got so far.
Great. Thank you. And thank you everybody for your time. I found this topic really interesting, and so hopefully you've gained something from the webinar today. If you've got any follow-up questions, then please feel free to feed them through to us.